Good evening, everybody. All right, so we made it through the holidays. And the anticipated blasting of the market one way or the other, or even a sector one way or the other, just didn't happen this year. So as we can see on the Dow chart, finished off 10 points today. But look at your overall trajectory, just absolutely nothing. Well, Happy New Year, guys. Yeah, so the rhetorical question that I put out earlier, I think in the YouTube, was think back of all the prognoses or projections that the so-called experts were conveying when it was last year at this time. Where would the market be in a year from now? And I don't know if there was one single one that came anywhere close. So that's just my illustration of nobody knows what the market is going to do in 2 months from now, let alone 12 months from now. So, RK, are you in here tonight? I was impressed with RK's self-analysis of what he needed to do to improve his trading this coming year. And that's what I usually do between the holiday or during the holidays. It's just, so I liked your analysis today of the things that you knew you needed to kind of change. And I do that every year. Now, fortunately, I know every single one of you has a journal next to their screens, and at the end of each day, they write down what they've done wrong or what they've done right, and they can go back through and analyze what they were doing wrong. And I can usually figure out what I'm doing wrong if I write down more than 3 or 4 times to do something that I haven't doing, like put a stop in immediately or pick an area that it shouldn't trade. And I go back and say, all right, I need to improve on this because I wrote it down so many times. Anyways, so RK also wanted to have an analysis of what we should be buying long term. And let's see, I don't know. RK, if you've got where you can copy and paste it and put it back in here, I guess that would be a benefit. So I had mentioned to the chat room earlier today, we are going to be going into more of the, I guess you would call it mental development of our trading disciplines. Let's see, I'm going to repeat these from, we're going to do sessions on day trading, entry and exit strategies, commodity trading, different option strategies, observations of, okay, great. Thank you, RK. Observations of things that are high probability analytics of candlestick charts, and that's going to be more from just my observations through the years of when you can tell when a trend has come to an end, even though it's not a full-scale reversal just yet. we're going to do a session on the skills you want to accumulate to be a successful trader. Somebody also mentioned how to think like a trader. And I was mentioning also that reading more of about Jesse Livermore, when I read through that, I kept thinking, man, he was doing everything that a chartist would be doing. He's using the same rules that, or he was applying the same rules that were common sense rules now with candlestick analysis. So I kept thinking as I was reading through the book that if he had just had candlestick charts, he would have been a huge wizard of trading. And I was also mentioning that we were going to work on what I have described right now as your diva. Everybody has a strong point of their mental perspectives. And I gave the illustration this morning of Bach and Beethoven all could see in their mind or hear the music they wanted to hear and then be able to write music for 50, 70, 80 instruments to all come to that position. That's something you can't do. That's something you have to see in your head. Or they said Tesla was he didn't write down his notes. He would keep envisioning in his mind what his invention was. So anyways, so that's what we're going to kind of go through. The mechanics we can teach everybody. I mean, the mechanics are, you can tell when you can tell what patterns are setting up. Those you can become a good analyst. And now the next step is, if you're a good analyst, now you have to become a good trader using that information. So we're going to be working on that quite a bit, especially coming right out of the chute this year. Because I look at my own trading, I do extremely well. But I think, man, I could even do better. So it's that statistic that I would show people that 70% of our trades are going to be successful, 30% aren't. So we also have to have the discipline or the education of knowing when a trade's not working to get out of it quickly and move on to something else. That's what is part of successful investing. But if we can figure out how to take that 70% to 73.4%, I mean, that is a huge improvement of the number of positions that you're not going to be successful. So anyways, I'm kind of babbling here. Do a lot more babbling recently, just because I like to. All right, so the Dow came back up pretty strong going into the close. The NASDAQ, though, is still showing nothing because it's still trading below the T line. The S&P 500, the same scenario. And the transportation index, nothing. So what does that tell you about your trading strategy? Or what should that tell you about your trading strategy? That pretty much tells you, well, the market's sure not helping out. I'm probably not going to buy things that are going to be related to the market trend one way or the other, because there is no market trend. So that tells me, all right, maybe I have to shift my analysis to things that are getting extremely powerful indications. One of them is obviously our best friend signal. Yeah, so if the market's going sideways, telling us we don't have anything to look forward to as far as real strong trends in the biggies, pretty much tells us that we can't really tell unless individually you look at Apple still heading down. You still have Nvidia still heading down, but you have things like Netflix. Netflix not really doing anything great. So not a real good trading market for the biggies, and not a real good trading market for things that everybody would kind of think was the things they want to buy, like Disney. We can see that Tesla is getting obliterated still. All right. So yes, that's what we're going to be working more on, is not only being able to identify the trends or the strong signals or patterns, but we also want to implement the trading, swing trading, or your day trading, whatever time frame you're using. Want to start teaching that. Start thinking like a trader using that information. So that's one major facet that most investment advisors, investment teachers kind of disregard. They say, if you see this pattern, this is what you can do or should do. But they leave out, this is what you should be thinking as far as how to trade that pattern. So yeah, Mark Douglas, I got to pull out his book. I've got one of his books that when we were at one of the training sessions in Las Vegas, we exchanged books. And so investing is not only recognizing what type of system to trade, it's also mentally learning how to trade that system successfully. So anyways, all right. So you're going to get a lot of the psychological factors of investing starting out this year. Okay, now I'm way off base. Let's see, what have I done? All right, so the ones that are giving you good, solid, good identifiable patterns, things like Tesla. Now I'll get off track here again. We probably mentioned this in the chat room this morning. But over the holidays, I'm watching some of these so-called experts say, or even one today saying, I've never liked Tesla, but it's getting to the level where it's now becoming a great value. He said, if it gets to 100, I might start buying there. And I'm thinking, why the heck is 100 a reason to start buying this stock? For all we know, this stock is heading. So there is so much lack of analyzing what a price movement is doing, because everybody that is an analyst or a money manager thinks, oh, I'm smarter than everybody else. I'm going to be able to predict. Yeah, there you go, Bill. I'm going to be able to predict when it's time to buy. During the holidays, I heard one analyst say, yeah, I'm going to buy Apple if it gets down to 150. And if it goes lower, we're going to buy some more. And I'm thinking, why would you buy more of a stock that is going down? That's that immaculate execution that, oh, as soon as I decide it's time to buy, it's going to turn around and head back up. That is not a viable trading program. You can throw all that, I don't even think it's fundamental research. All anybody's doing is saying, well, my evaluation is that you can start buying at X. And I don't know where any of their evaluation information is credible. So, all right, I'm getting off track again. So, the strategy should be based upon what is the market telling you. Right now, the market's telling us it is going absolutely nowhere. They don't know which way to take this market. They being the market. That means things like Tesla, Netflix, Amazon, they'll all be pretty tough to figure out which direction they're going to go. So now we can go to the next step and say, all right, if we've got 9,500 trading entities out there, why don't we use the information that we know moves prices and pick out the strongest signals with that not double, but rare process that if this tells us something new's happening, let's go see why it's happening. That research analysis, reverse engineering. Something big's happening, so let's find out why. All right, so the information on this one, I guess, was on AUPH, was that they had discovered, or no, they had won a some sort of patent case against somebody else. Data is a pattern that we can recognize where it's broken out through this level coming off the 200. Looks like a wave 1, wave 2, going into wave 3. Wave 1 may also even be as significant as, as wave 1, wave 2, wave 3. Patent settlement. All right, thank you, George. I can't think of the right words at the right time. So there is always something out there that gives us a high probability trade setup. Observe the obvious. I got to give this another name. I guess we call this a J-hook plus. Bullish engulfing right off the 50. Wave 1, wave 2, going into wave 3. So what we want to really emphasize is we want to be trading what the market is giving us. So you can see that breakout on ORMP, which somebody's been asking about in the chat rooms. What happened after it broke out? So that's kind of what we're looking for in something like data or this one. Future fuel. Look at the information we've got right here off the 34. Best friend gap up through the T-line at the breakout level. So what do we have possibility here? Wave 1, wave 2, wave 3 starting with a best friend signal. But does every trade work out? Well, if we can identify where the new information or the new investor sentiment is setting up, and we see something like, want to know what to do once it's up here. On this one, what would have been our trading strategy? Well, we better open positive and trade positive. The fact that they gapped it down below the previous day's open, what that immediately tell us? Told us that bullish sentiment really isn't there. So if I've pulled the trigger and jumped the gun and bought on this day, anticipating this move, I also have to know that if they open down here and trade down here, close it out. Take that money that had prospects, that now that those prospects have disappeared, and go find something else. So if I see something like this, where we see a wave 1, wave 2, now support off the 34, back up through the T line, a scoop type pattern, this is what we're anticipating. Now when I say anticipating, our expectations of coming off this type of signal, gap up, scoop type pattern, is that it should be doing this. That's just our basic knowledge of knowing what that signal looks like, or that pattern looks like. So we know what to do, or we should know what to do. If it's trading positive, we probably want to be buying. If it opens lower, we don't pay attention to it until it comes back up through the open. So those are little steps that kind of include the probability factor of what's going to happen after a price move. AMKR. Same scenario right here. Even a more obvious, observe the obvious. A little best friend gap up through the 50, through the T line, through the 34. Wave 1, wave 2, wave 3. Now, does that mean they're always going to work? The answer is no. But the probabilities say, if we're buying on positive trading, breaking out through this level, the probabilities of the situation is going to create a wave 3 based upon bouncing up with a best friend signal. So this, again, is where do we find the things that we want to be getting into because there's more activity going on or new activity going on, that we want to be alerted to the fact that this is where the money is going, and also know exactly what to do when we see a breakout situation. Now I use the term breakout. Oh, I'll just kind of we will be doing a mini spotlight training, market timing. The indicators that tell us how to verify that a market trend has reversed. That's going to be on the 14th. We're going to do the same scenario that if you do the mini training for $47, the next weekend we are going to be doing the market timing / candlestick pattern analysis, and that's the $100 training for members, $297 for non-members. But if you paid $47 for the market timing training previous, then your price will be, I think Abe said it was only $97. So anyway, that's something to keep an eye out for. And if you have paid for the candlestick patterns session that we were going to do, you're already paid to go into that one. So, whoops, where did that stuff come from? Okay, so here's what we're going to be concentrating on. We want to find the trades and the process for identifying which signals and patterns have the highest probabilities of moving even though the market's not moving. Doji, 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 best friend gap up. At least we can factor maybe they're going to bring it back up to the 50. That's on STAA. IDCC. There's a big breakout of a sideways chart with a best friend kicker type signal. So what's the first thing we do? Find out what the news was that moved this price to see whether this was going to have some more follow through or whether this was just a one-shot deal. Well, what happened here? JSPR. Well. JSPR not coming up for some reason. Oh. No. I don't know why that is. I'm going to take a quick look here. This is not working out the way I planned it to. Okay. So why is it coming up over here? So that's another one. I think they had some sort of good test on their phase 1/phase 2 of some sort of, God, I can't remember, whatever their product is. OFIX, wave 1, wave 2, starting wave 3 that actually broke out through this level today. That's OFIX. MRTX. There you can see the fry pan bottom indecision. Now you can see what the decision was. They're up above the T line. Now, why is this relevant for this pattern? Pretty much tells us there's not a lot of resistance here. If they get this one moving, there's not a whole lot of resistance. They could pop this pretty quick, which that would give you what they call a column reversal setup. Oracle. This is, again, that little fry pan bottom. This right here, that little slow trajectory of buildup of investor sentiment, isn't a quick reversal. It's telling you they're adding, now they're starting to buy. So just that trajectory, that visual, tells us, well, they're not afraid of this one, they're buying. So where would be a good place to really start adding to it? It starts coming up through this level. SPNE is just a good observation of a fry pan bottom, bobble breakout with a doji sandwich. This is the type of visuals that we want to get accustomed to, because where do you buy a signal? You want to buy a signal when you see the signal in the oversold area. Where do you want to buy a pattern? Usually the pattern is in the breakout or the overbought area. IMMR. Here's another good reason why having a chat room with everybody kind of looking for the same signals is beneficial. Because I probably wouldn't have seen this one until tonight. But now I'm already prepared to say, well, you want to think about buying this one, because look at your hammer signal at the 50 in the oversold area, gap up through the T line. There is absolutely nothing wrong with that chart. You'll probably see that, whoops, on the recommended list tomorrow. Kind of the same scenario here on, not a huge price mover, but the probabilities are wave 3 could be starting. Now let me go back one more. I don't know if it was this one. Yep, it added a little bit. There was one. that I looked at earlier that had moved pretty good after hours. I'll find it. Somebody pointed out Land's End. Big morning star signal, scoop type pattern. That has better prospects of running up pretty quick to the 50-day moving average. ATNF. Another one somebody pointed out today as a J-hook pattern setting up. And that was after whatever all this was. Flat for months. Now there's some new activity in this one, obviously. And why is that obvious? Because it moved, it consolidated. Now whatever created this big movement is now taking effect. That's where you want to be. You don't want to be in something that's languishing. You want to be in something where you can see there's new activity coming into the price of that entity. Another little morning star scoop type pattern. Nothing great yet, but that's kind of warning you that they aren't going back down through the 50. Look for more upside. Let's see. RSLS. Kind of the same scenario here. Broke out big. That doesn't look like the same chart. Let me go over here again. Oops, for some reason that other chart didn't have a... So here's another breakout, which now warrants, let's take a look and see what's causing that price move. Yeah, I don't know what's happening here. That one's different. So I don't know what's, let's see, did I just do this? Now it's completely different. RSLS. That doesn't look anything like this one. So take a look at your RSLS on a different chart system. There's your next J-hook pattern. Look at your, kind of your fry pan bottom breakout, your consolidation. Now whatever caused that price move is now kicking back in. This is where your prospects of not only being in a good trading situation, number one, but the magnitude of the move could be relatively strong because of the pattern setup. Same scenario on CKPT. Definitely broken out through that level. Now look for another wave to the upside. We are getting information. One, something big happened. Two, it consolidated. Now, after the consolidation's over, whatever created that big initial movement is kicking back in again. Now Blink, picking up a little bit of steam. A morning star signal. So this is where you obviously want to see what your targets are going to be. If this starts trading positive, just want to see what happens because you're still in a downtrend. To see something change that investor sentiment, needs to see something pushing it through levels where it kind of fizzled out before. Now that's just crazy. FIG, FIG. Now why that won't come up over here, I don't know. Well, well, well. I have done something severely wrong. That was completely different earlier. I don't know what I'm doing. All right, I'll try to zip right along here. OLO, warning star signal confirming. I got to look for the 50-day moving average. Well, maybe was it FIGS? Yes, you're right. Guess all I have to do is write them down correctly. There's your best friend. Series of dojis. Decent rate of return to come back up and test that high. We did STAA. And Weibo, that's your T-line crunch. Notice how the T-line kept pushing it, pushing it, pushing it. Finally, they broke through. That would be one where you stay long. If you were buying here, obviously you want to be a little bit more attentive. But the fact that they went through the 200, not only went through the 200, but gapped through the 200, was a good indication that they were not afraid. They, being the market, was not afraid of the resistance at the 200 anymore. That means they anticipate it's going to go much higher. SGH, oh, maybe this was it. I think this was it. Well, well, well. I am just not hitting my butt with either hand tonight. Okay, so that's what happened to SGH after hours. So this is one you kind of watch because apparently they reported earnings today. No, way off base. There we go. Okay. And there's kind of your McMuffin. GTHX. GTHX, yes. Morningstar signal, doji sandwich. Even though it's got resistance, remember your McMuffin is kind of a double confirmation that the bulls are taking control with the Morningstar signal and the doji sandwich. Now Kayla, again, this is one we're going to do when we go into the breakout analysis sessions. You can see how it broke out, moved up, now has gapped down and done a doji. Now that would probably warrant closing out the position. But with the trading platform or the trading strategy of the doji rule, but if this opens positive tomorrow and starts trading positive, you can buy it back because that is now creating that double doji type setup. And the electric vehicles got beat up today. Lucid. This is a red candle. So it opened up here and closed down here, not showing good strength on LI. We're still short Rivian. And here's another little added trend analysis tool. If you see something open right at the T line or at the 50 or at 34 or the 50 or the 200, and they immediately start trading it off, that tells you it's still in the current trend. And obviously, Tesla leading the way as far as yeah, they're probably all being dragged down by Tesla, but also did somebody put a news item here in the room earlier today that a lot of these companies, if things are going the way they are, they're running out of financing, that bankruptcy might be in some of the futures of these. All right, so we're looking at a market that we don't know which way it's going. So there's still some good short positions because of the patterns. You can see the bearish J-hook pattern on STZ. So whose handwriting is this? AC/DC. That's not good. The bigger the signal, the more compelling the bears are in control. That little rollover, continuing this downtrend. Saba. Bearish J-hook pattern if this opens lower tomorrow. AR, there's your evening star type signal, your dumpling top, bearish double doji setup. At least figure your first target is here, so you be in the right direction, but possibly much lower. And INFA. I think after hours, whoops, went the opposite direction. With regular hours here. So careful, I say be careful when you're analyzing after hours, because if you get this type of setup after hours, you pretty much want to check to see how much volume was right here. 8 shares supposedly. 1 share. 2,000 shares. So when you see an after-hour chart that doesn't look the same as the regular hour chart, kind of go with the regular hour chart, because usually the volume after hours is so small that all it is ticks, or where they've ticked the price. All right, so trading strategy in this type of market is find the ones that have the strongest sell signals or the strongest buy signals. And so tonight, we're probably going to be looking at 3 good strong charts and maybe 2 good bearish charts. But to act on them is going to be kind of identifying what the pre-market futures are showing before the open tomorrow. Okay. All right. Real quick, you can see what crude oil prices are doing. Came right smack dab to the 50-day moving average and have started selling off. Gold prices still in a nice uptrend. Soybeans, that's a toughie to trade. Wheat, really not showing any direction. And I was trading lean hogs today because of what I would call, obviously seeing where the resistance level was and where you suspect or would suspect the next support level to be. So that makes much better probabilities to be short hogs and the cattle. Cattle, not so much. That's just kind of a chart. All right. There's your high yield bonds, also not in any great direction. So another indicator of what the overall investor sentiment is right now, which obviously is nowhere. Okay, so is there any general questions on candlestick analysis? All right, I guess if not, Jim, go ahead and do the double line. And in 2.6 seconds, do the next double line. Okay, Boeing. All you can do here is stay long, as long as it stays above the T line. The Smith & Wesson. No, semiconductors. That's a nothing chart. Would not be trading that. There's nothing there to give you any direction. IQ, just stay long, but it gapped up today in the overbought condition. So keep your safety stop here at today's open. It shouldn't come back down through that level. Mullen keeps acting a little bit stronger all the time. So you can kind of see the bottoming action. You could still be buying this one on strength. Advanced Auto Zone or Advanced Auto Parts. Gotta get a drink here. All you can do is stay long on this one, staying above the T line. EXPV, that's kind of a nothing chart. Would not be long or short this one. Henry, that's not too much different than this afternoon, so I would just stay long on this one. Wynn Resorts, you can get ready to buy if this happens to open positive tomorrow, and I think we did, barring on the close today, didn't we? Just stay long as it doesn't close below the T line. Well, there's just to do a quick scanning criteria. Like scanning criteria, I don't know what you would call the scanning criteria. On whatever charting or scanning software you use, you can put the formulas in for whatever signals and patterns you're looking for. I use Metastock because you can scan everything, whether it's U.S. stocks, Canadian stocks, European stocks, Asian stocks, the currencies, the commodities, everything on Metastock. If you're just trading U.S. stocks, TC 2000 is a good, steady platform. We did Oracle, didn't we? Oracle, you could be buying based on this uptrend. Jounce, nothing yet. I'd be more apt to be now a buyer if it came back up through today's high, telling you the 50-day moving average is now being broken out with the fry pan bottom. Oh, what happened here? CRBU, warning star signal. You can be buying this one. Just use the T line as your stop. Mesa, just stay long. You're getting up here in the overbought area, have a safety stop somewhere, like maybe the halfway point of this candle. PayPal was doing a nice fry pan bottom. Stay long on this one. Look for the 50 to be the next likely target. Cisco. This one you could buy on positive trading, doing a doji sandwich breakout. Allied Bank. Not real exciting yet. Probably I would be someplace else. Texas Instruments. Nothing there. You'd see, obviously, it opened above the T-line, closed back below the T-line. Would not be in this one. I had one question on the T-line. How far away to sell or buy? I had one question on T-line. How far away to sell for buy? How far away to sell for buy? I mean, Brent, are you saying if it's way below the T-line, how far away? All you really want to do is, first of all, see if there's a buy signal. And then if it's excessively away from where the T-line is, just becomes that much more credible that at least your first target will likely be at the T-line. Newmont Mining, right here at the breakout area. This one with a little gap up from the hammer signal. That one you can buy, and you get a little bit of head start by seeing what gold prices might be doing early in the day, meaning before the market opens. If it's opening positive and then this opens positive, gives that much more strength as a buy. AEM, just stay long. Gold stocks are working well. Apple, you could go short on weakness. Now, remember, you got one deterrent. Right now you're in the oversold area, but you've been in the oversold area now for 3 weeks. So you could short it on weakness. And ELPH, no, where did I come out with ELPH? CELH. Another one you could go short on weakness. They can't get up above the T-line. Okay, did I answer your question, Ra? Baba? Still a little bit dicey. You do have a bobble breakout setup. So you would be buying this on positive trading tomorrow, which would also be a result of probably the markets opening positive. And then you wouldn't want to see it close back below the 200. Bidu, nothing wildly exciting. So you've got the doji, or the doji rule, that pretty much indicates it's going to move probably in the direction of how they open after the doji. And JD.com, same scenario, except I probably wouldn't pay attention to this one until it comes up through today's high, breaking out through that downtrend. Okay, a couple more. All right, so we're going to be concentrating a lot more on not only the mechanics of identifying signals and patterns, but the psychology or the mental process of being a good trader. Let's see, buckle. Got this forming up, but you're not seeing a whole lot of strength. If I was long, it better come up through this level tomorrow. If it stays below that level, there's just not very much strength in this one. And ENVX. I thought down more than 21% after hours. Well, that's just a fine howdy-do. Regular hours, post hours. Well, that's just great. Apparently, whatever they announced as far as their I guess the president was supposed to be giving out some comments tonight. Apparently, they didn't like his comments. Yes, SGH was earnings, so it's up here toward the top end of the range. On 60,000 shares, that's probably not a whole heck of a lot. Let's see what. So it traded 1.3 million. $24,000, 1,000, very little, very little, very little. Yeah, so. But what that should do is trading at 16.22. I mean, if it opens up here, start watching your 10-minute chart. And yes, Summit. Oops, Summit I forgot to. You're still in this 45 degree. Okay. Today was the first day of the year, blase trading. So just prepare yourself that we're going to be doing a lot more emphasis on the psychology or what makes a good trader. If we've already had have gone through the first hurdle, PHVS, just stay long, we're right back here. Now I forgot what I was saying. Oh, the first hurdle, which most investors run into problems, is they're promoted. I say they. I did it myself years ago. Somebody say, oh, we've got the new secret on how to trade successfully in the market, and you try it for 2 weeks, 4 weeks, 8 weeks, and it doesn't do anything. And at the end of that time frame, you don't know what you should have done right or what you should have done wrong because they were telling you everything. Then you go on to the next one, same thing happens. So by the time you go through 6 or 8 of these magical new trading strategies where we found the secret in the market and you just pay us for that secret, nothing happens. At least with candlestick analysis, we know they work. All we have to do is learn how to use them correctly. And then, once we have that process out of the way, knowing that they do work, now we just want to figure out how do we keep our own emotions, our own disciplines into using that trading successfully. So with that, everybody have a good evening. We will see you bright and early tomorrow in the chat rooms. We'll see you then.